We then go on to our next presentation. Now we're moving a little bit from the manufacturing side into the market side, and looking first into the EU market and then later into the US market. So welcome to Grant Budding. He is a senior consultant with Euromonitor. Euromonitor has graciously accepted to make also a presentation to give us some insights into the EU market in next year. What can companies expect when they look into the EU market still in the COVID, and maybe get some insights of one Euromonitor thinks that the pandemic could be over. So Grant has a lot of experience also as an international development expert, working with a lot of agencies actually, including the Swiss SDC, Swiss Development Corporation, the World Bank, UN Women, USAID, and others. Now it's with Euromonitor. And Grant, thanks for being with us, and looking forward to a very interesting presentation on the EU market.
Perfect. Just confirming the time slot. I am next. I thought Julia was next.
Oops, that's true. I get this wrong. Julie, do you mind, or do you have any commitments later on?
Sure, Grant can go now, and I'll do the wrap up then.
Right. Sorry, it was my oversight. I don't know why.
No worries. I'm fine either way.
The wrong order of papers on my table. Sorry for this.
Perfect. Okay, no worries. Perfect. Let me share my screen then. Hopefully everybody can see it clearly. Okay, excellent. Yeah, just to, I guess, first off, thank you to ICC for inviting me here. It's a pleasure, as always, and happy to present really on what the outlook is for the apparel and textile industry and what different players can do about it. I think lack of visibility as to what the outlook is one of the key challenges that a lot of firms are facing at that time. So I will do what I can to provide Euromonitor's perspective. Some background on Euromonitor. We are the world's largest independent strategic research company. We were founded in 1972, so over 40 plus years of working in this industry. We've got over 1,000 analysts based across 100 countries, and even more than that for that matter, as well as our 15 offices around the world where we have about 1,300 staff. In terms of the export and international development space, we really excel in this. In the past 10 years, we've supported over 50 different exporter associations in countries covering roughly 70% of the world's population. The agenda today, I want to go over the current state of apparel and textile with a focus on Europe, although much of what I say is really true globally, or at the very least for developed markets. And I think the implications that I will talk will really relate to how exporters into Europe will adapt to this. I'll talk about the demand side trends as well as the supply side trends. But I think one of the key messages that I really want to hammer home in this presentation is the impact of COVID-19 is really contributing to the convergence of these demand and supply side trends. And many of these trends have already been discussed earlier today. But it's really, everything is pointing in sort of the same directions here. And then following that, I'll close with some key recommendations. In terms of the current state, I don't think it's news to anybody here that apparel is one of the heaviest impacted industries in the context of COVID-19. When we look at all the different industries, only travel essentially fares worse than apparel and footwear. We're seeing an approximately a 17% decline globally. This was based on July 2020 numbers, and we're expected to further downgrade those as we see the impact of the second wave in our subsequent November update or December update. But also important is not only the global decline, but typical mitigation strategies within the textile and apparel space include looking for new markets or offloading inventory to other markets. And one of the challenging things about this pandemic is essentially there are 0 markets that are expected to grow this year, which means there's simply no markets currently that are showing signs of growth that allow producers to really diversify there. It's essentially everybody going in through the same challenges. Now there's some relief, of course, in transferring to production of PPE, but there's a longer term question about how sustainable that is, given that essentially all textile manufacturers have transferred to PPE, and the margins for those will start to go down as demand declines. So when we think about really the textile industry, the challenge is that the long-term impacts of this pandemic are unavoidable. And we're really seeing an acceleration of pre-existing trends that are going to have a long-term impact on the industry. When we talk about this in terms of sheer numbers, looking at the 50+ markets that Euromonitor covers, by 2024, we will have a cumulative lost opportunity of $1 trillion. So essentially that means that the market will by 2024 be significantly smaller than it currently was last year. And the cumulative loss there is about $1 trillion just in those 50 markets. So about $200 billion a year in lost growth and lost opportunity. When we look at this from a regional perspective, looking at where Europe, for example, situates within this, Asia Pacific is essentially the only region that is expected to be larger in terms of market size in 2024 compared with the pre-pandemic baseline. That means that the market in Europe and the European Union will be significantly smaller in 2024 than it was in 2019. And as a result of that, textile companies exporting to EMEA will be competing for a slice of a smaller pie. So it's more important than ever to really differentiate the firm. And the key question is now. One caveat I do want to add on these numbers, though they cover only the 50 markets that we tracked. So in the context of Middle East and North Africa, there is still potential for growth that may not be reflected in our numbers due to lack of coverage. But overall, the situation is relatively pessimistic at the global scale in terms of the aggregate total amount of demand. But that doesn't mean there's not opportunities for textile exporters. And these may be in terms of the right positioning on the market side, as well as optimizing your margins throughout the full supply chain. And really the implications of this, because the market will be smaller in 2024 than it was in 2019, the idea of a recovery is a bit of a myth. And what we're really seeing is the acceleration of industry transformation. This is coming on the demand side in terms of drives towards a purchase with purpose, which includes increased amount of personalization of products, digitization of supply chains, including e-commerce, and increased sustainability. And failing the ability for exporters to adapt to those three trends, a focus more towards value of money, which has the potential to be, as was previously discussed, a slow death in terms of subcontracting. On the supply side, we expect to see greater industry consolidation, the emergence of online giants as new players entering this field, and with increased market impact, and most importantly, and perhaps the greatest opportunity for exporters in this region, a drive towards nearshoring and proximity supply chains. In terms of demand side trends, the key point that we understand at Euromonitor is that the post-COVID consumer will purchase with purpose. This was a pre-existing trend prior to the pandemic, and it's only accelerating. Essentially, this means that consumers will require a clear and compelling value proposition in order to pay higher price points for their products. And these are typically being conveyed through an increased focus on sustainability, digitization, and personalization. In terms of purchasing with purpose and sustainability, environmental sustainability is obviously a key point for consumers who are increasingly demanding that their products be environmentally sustainable. However, in the context of sustainability, we are seeing this more as a rebranding of corporate social responsibility and as a catch-all phrase that includes political and social values, environmental consciousness, and diversity, inclusion, and equitable workforces. In short, sustainability is not just about going green, and this is reflected in the buying patterns of consumers. Euromonitor's consumer survey has noted that consumers are increasingly looking to buy from brands that take support on social and political issues that align with their values, that donate to nonprofits and charities supporting causes that align with those values, and make purchasing decisions based on the brand and company's social and political beliefs. And brands are particularly adopting this sustainability, not in a one-size-fits-all way, but they are adopting their practices to particularly target a certain audience that they view as attractive. So Nike's endorsement of Travis Kaepernick is probably the most emblematic example of this in action, but we're seeing this across all major brands who want to make sure that their sustainability message resonates with their target consumer audience. On the digitization, I don't think it needs significant elaboration that e-commerce has picked up. This was a trend pre-pandemic that we're only seeing accelerate, with growth rates of e-commerce close to approximately 20%. Of notice, not only are Generation Z and millennials more likely to purchase online apparel or shoes than their older counterparts, this trend does not extend to all product lines, with baby boomers and Gen X, for example, more likely to purchase groceries and health-related products online than some of their counterparts. So we're seeing sort of a drive towards specifically apparel and e-commerce purchases among younger consumers. An important part to consider in this digitization is the impact that Industrial 4.0 is having. Essentially, what we anticipate the industry to increasingly move towards as sustainability takes hold and as digital technologies increase, a move towards a make to stock to make to order. It's probably premature to say that there's the death of fast fashion, but we're definitely seeing a move towards greater customization and a more seamless integration between the consumer ordering their product online and the manufacturers producing these products. And part of this is related to consumer trends. As a result of the pandemic, consumers are increasingly willing to wait for their products, particularly if it's personalized and catered specific, it has that clear sense of purpose in the purchase there. A perfect case in point as to how Industrial 4.0 is integrating both the supply side and the consumer side. In May 2019, the Japanese underwear brand Weiko introduced a new service called 3D Smart and Try. The company developed a 3D body scanner with Liquid incorporated, where customers can go to the measurement room and use the 3D body scanner to measure their body sizes by themselves. This complementary scanning takes only seconds and can be done without being touched by store assistants. Once the measurements is completed, customers use tablets to check their body size data, as well as cite certain recommended products, all enabled through artificial intelligence to get the right match. Of course, the elephant in the room is the reality is these trends will not be for everyone. They only cater to more the premium segment of the value chain and those who can really provide a key service to their buyers. Unfortunately, the challenge is that the impact of the COVID-19 pandemic will have a very negative effect on the middle class, particularly in Europe, where we see middle class populations expected to decline towards 2022 and only afterwards start to pick up. This includes countries like Germany, Italy, France, and many others where the middle class is not expected to recover in terms of total size by 2022. All of this will increase the cost competitiveness of the industry as companies more and more compete on cost, particularly for those who do not have a clear value add to their product beyond cost and efficiency. Further pressures, including private label and harsh discounting, are also expected to reduce industry margins for those without a clear value proposition. When it comes to private label, we saw previous growth in 2015 and before a slowdown in 2016, 17, 18, and 19. We expect the increase in private label will go up to the previous growth rates of 2015, particularly through the emergence of online giants. We are also seeing a dramatic pressure on prices for the consumers. When we look at the unit price points for different categories of products across Europe and the globe, we're seeing between, on average, a 6 to 8% decline in price points between 2019 and 2020. All of these are expected to have a negative impact on the prices that brands are able to charge consumers, and this will trickle up through the supply chain to the price points that are paid back to manufacturers. This, however, is not all doom and gloom. There are certain elements on the supply side trends that converge with these demand side drivers that will create opportunities for exporters under the right circumstances and for those that take the right action in order to respond to these trends. On the supply side, we expect to see greater consolidation and vertical integration. We expect to see the emergence of new players, and we expect, most importantly, to see a drive towards nearshoring and proximity supply chains that could potentially have a strong benefit to those in North Africa. Ultimately, to echo what Rajesh said in his presentation, success in post-COVID will be driven by stronger, deeper relationships between buyers and suppliers, much more about strategic partnerships and building 5-year plans with your customers and your suppliers to really align and mitigate the risks that occur from these trends in relation to both decreased price points and decreased margins, but also to present disruption in terms of lost and canceled orders. This is particularly true with demand for textile and apparel, essentially going through a change here. Going back to consumers in general, saving money is going to be a key priority, and they're going to be much less likely to spend on different types of products. The implication of this for the apparel sector is that we expect to see a gradual and sporadic recovery, not necessarily V-shaped or U-shaped, but something that comes about in fits and spurs across different markets as different markets reopen or as austerity measures are brought in some cases, triggering contraction and growth, and where stimulus packages are maintained and others allowing for the continuation. So essentially, although we've seen some rebound in certain markets, we expect that to be very sporadic. And we expect the results of this to be very long-term in their implications as price points go down in response to excess inventory from previous seasons or excess production really designed to offload that into other markets. And the result of this essentially is that everybody is at risk in different ways. And that control of supply chain is really critical, making sure that you have good quality, cost-effective inputs through strong relationships with your regional suppliers in order to mitigate against any risk that comes from having to reduce your price points due to excess inventory and excess demand in the market. And those who do so will actually be able to come out of this much stronger and much more entrenched in the industry than those who failed to do so. There's going to be particular clear winners in this landscape on the brand side as well. So some companies went into this pandemic with very high amounts of cash, and apparel exporters will really need to pivot towards strategic partnerships with these partners, adapting their operations to each company's individual situation. So a company that like Inditex, who went into this pandemic with a high amount of cash on hand, is going to react very differently than a company that has much more stresses on their cash flow. And their interactions and negotiation room with suppliers is going to be reflective of that. So for exporters of apparel and manufacturing capabilities, it's really important to take into account your company's, your end buyer's financial situation to develop win-win situations that don't put you at unnecessary risk of canceled orders and allow you to essentially produce more efficiently. In terms of the emergence of new players, e-commerce giants are also expected to become much more substantial players in this market as they focus on their apparel line. As previously noted, we've seen high amounts of historic e-commerce growth in apparel and footwear in the 50+ markets that Euromonitor tracks. But this includes not only selling brands through online marketplaces, but the development of private label by these marketplaces themselves. So new players such as Amazon are really expected to focus on their own line of products. And just as one example, Amazon currently has 74 private label brands. 87.8% of them fall within the clothing and apparel space. Now, there's certain regulatory barriers that prevent them from unduly promoting these, but the point is they are becoming a much more relevant player in terms of the overall marketplace, and particularly with the drive towards value for money, will contribute to depressing industry prices even further. When we look also at the long-term supply and demand shock that has occurred, and as discussed, this is really a convergence between the supply and demand trends. One of the things we saw going into the pandemic and well before the pandemic was a general move towards reducing the amount of inventory that was kept, part of which was a desire to increase the sustainability of the business. So we saw on average for the inventory of the top 28 publicly listed firms, a decline year on year by close to 5% leading into the pandemic. Following the initial pandemic, the first quarter of this year, those inventory volumes shot up to by an average of 1/3, with companies in the mass luxury space particularly hurt, as well as sportswear, while other firms in the more casual ones typically had poor cash flow and therefore had to offload their inventory, and in some cases even in incineration. So we saw going into the pandemic a really drive towards sustainability, particularly from the profitability perspective in terms of keeping inventory low. And that we expect to see come back once again. The challenge that's going to be for a lot of apparel exporters is many of this excess inventory that was for the spring and winter seasons is still going to be held by these firms and going to be offloaded over the coming years. And we expect that as different markets recover at different rates, this trend towards excess inventory may potentially continue, or at the very least, present an increased risk to manufacturers in terms of canceled orders, but also in terms of having to lower their prices due to excess supply. But when we talk about how this converges with the consumer trends, this comes with some key actions that need to be taken by manufacturers. And many of these really center around integrating sustainability into your bottom line. One of the key messages is really produce less, but more often. Because it's going to be a smaller pie that firms will increasingly be competing over, it's important to focus, specialize, and really optimize your own supply networks to make sure that you're the best at what you do. If successfully executed, as previously noted, if you're able to develop a great Prada bag, you will have a line waiting for you to order. However, if you continue to focus on purely that low value added labor without really differentiating yourself, you're going to increasingly find yourself at risk of lower margins in this really challenging marketplace. Other recommendations in terms of integrating sustainability here into the bottom line is to make sure to take advantage of the public and third sector. A lot of governments, which I'll talk shortly, and finally, building long-term partnerships with your suppliers. When it comes to producing less more often, I want to revisit the topic of nearshoring. It's been noted that in the longer term, the pandemic should affect the composition of the global textile, clothing, leather, and footwear supply chains and trade, and accelerate the or nearshoring of production. This was put forward by ILO. We started to see these trends before the pandemic with companies such as MENATEX, who had already shifted their supply chains to North Africa and Turkey, with 59% of factories located in the region. We expect this trend to continue and accelerate, and this is obviously an opportunity for those in this room. Nearshoring is both more efficient and environmentally friendly. So when we look at shipping times between different markets, to Hamburg as an example, we see just a wide variance between shipping times between Dhaka, Shanghai, Ho Chi Minh, even Karachi, versus closer ports such as Mersin, Istanbul, and Casablanca. And nearshoring allows for reduced lead times, allowing for more frequent smaller orders, and may even allow manufacturers to produce multiple times in a given fashion season, allowing them to essentially adapt to the risk. And this has implications on how you deal with your partners, with your suppliers and your buyers, in order to build, essentially build those strategic partnerships that allow you to produce more efficiently with less waste. And that's essentially how firms are going to be able to protect their margins, by making sure that they're not producing more than they can sell at a fair price. This also has impact too, in terms of reducing the environmental impact from transit and waste, something that we increasingly see buyers and putting into their supplier KPIs. When it comes to the public and third sector, it's important to recognize that textiles exports are critical to regional economies. In many of the countries in this region, they are the top or near top commodity for export. In countries even such as Morocco, where they roughly rank around 4th, they're very close to the top 3, such as automotive and food. So textile exports are extremely important. And what this means is that government, international development, and manufacturing clusters have a shared interest in increasing the competitiveness of their suppliers and working together towards a common goal. We've seen how some governments for example, Turkey, reacted quite quickly to the pandemic in order to provide the financial stability to the sector. So as one example, Turkey, through a wide range of forms, including the SME organization, the Credit Guarantee Fund, and the Exim Bank, offered a wide range of financial support. But even before the pandemic, we saw the Turkish government to be very active in supporting their textile industries in upgrading to meet the ongoing demand. As one example, Euromonitor worked with the Sustainable Textile Association or Cluster in Bursa to help run a workshop to really align the members on the potential areas they can upgrade their technologies into 4.0 and to build the business case to doing so by presenting alternative scenarios in which the Turkish industry upgrades to meet the current demand and the future demand versus what the competitive landscape will look like should they continue to focus on low value activities. Other areas where the private sector or the public sector are able to support include supply chain finance. As one example here, IFC runs the Global Trade Finance Program. The main features of this include reverse factoring at an attractive discount, pricing based on superior credit rating of the buyer, loans offered on an unsecured basis to supplier, all of this digitally enabled for traceability with different pricing schemes based upon the manufacturers meeting certain sustainability KPIs. So essentially more sustainable firms are able to get their loans at lower interest rates. The result of this includes over $3 billion dispersed to 1,000 suppliers in 14 countries, with the average invoice side being about $13,000. As one case study, Levi's in Pakistan, working with their supplier US Apparel, using this program was able to reduce the average amount of days to receive payment by approximately 55 days, resulting in financing savings of $40,000 a year. So this is an example of how working closely between international development, governments, and the private sector can be done in order to protect the margins that we expect to be increasingly under pressure, even if those margins are in areas elsewhere in the value chain, such as reduced financing costs. When it comes to governments, we at Euromonitor have essentially 4 key recommendations. The first includes facilitating internationalization of the textile clusters. A regional collaboration here is key to the short-term survival of apparel exporters. Essentially, those that will succeed will be those who are able to produce less, more often, and with a more specialized focus. And in order to do that, you need to have strong integration on the back end with your supply chains, primarily in regional markets in which you have preferential trade agreements with. By linking suppliers, buyers, and financial institutions, governments can really catalyze this and make sure that these supply chains and clusters operate most efficiently and share knowledge. It's also critical that governments support their members, their industry, in providing real-time support and guidance, not only on the current situation, but in terms of expectations on where that industry is expected to go. It's very difficult for individual SMEs or small businesses to keep tab on the direction of a market as wide as apparel and textiles. So it's important for governments to provide clear direction as to where they think the industry is going and what SMEs and other entities should be doing to adapt. It's also critical that governments support their industry in repivoting the industry to focus on depth, not breadth. And this ultimately, success post-COVID will be driven by stronger, deeper relationships between buyers and suppliers. And this will lead to increased specialization with higher margins in a contracting market. But it will require that greater collaboration and a greater sense of innovation to really think critically about where a given industry should be. And finally, governments really need to support in preparing members for the future. Given the crisis mindset, as I've mentioned, most companies are really focusing on today, the next few months. But because essentially recovery here is a bit of a myth, and what we're seeing is a long-term industry transformation, it's important that governments take that lead in sending that message to their clusters that the time for changing and the time for sort of optimizing the way they operate is now. Perfect. Any questions?
Great, Grant. Thank you very much. Lots of information already. I was really bombarded with lots of information. It's great. I was mentioning this morning when we did our overview about the COVID impact in the countries and what countries are trying to do. All of the countries would like to move into diversification. But as you said, there is no growth anywhere, at least not in the 50 countries that you are surveying. So, so all the other recommendations I need to be really taken on board. I have nothing in the right. Yes, please.
So yeah, just a note though, as this is in terms of diversification in the short term. So in the immediate crisis element, we do expect different elements of recovery in 2021 and moving into 2022. And we don't track many of the African continental free trade countries. So we do potentially see opportunity there, but we don't have the data to prove it.
Okay. Africa was mentioned by most of the countries also as a potential now with the Continental Free Trade Agreement in place. I don't see any questions in the question and answer box. Jana, do we have any hands raised for some questions?
At the moment, no.
Then let me ask one question which I did not fully understand, and maybe you can clarify. So there's clearly, everybody told us, I mentioned it today several times, there is a tendency towards nearshoring, which is at least good for countries which are in the MENA region. But you also mentioned that you're not 100% sure of how fast fashion will go in the future. You said there will be no death of fast fashion, but probably some reduction. Is this not a little bit of a contradiction? Because nearshoring in principle would mean fast fashion?
Well, I think when I say fast fashion here, I mean sort of the mass production of inventory just for the purpose of stocking. What nearshoring does is allow faster supply chains, allowing you to deliver smaller quantities. So that's more what was meant there in terms of the idea of mass production, for that to sit in a warehouse and then be offloaded into the retail. We may see more of a decline in that. And much more of kind of that made to order, smaller batch sizes moving into the future. Okay, so they have another question on this make to order, which could be an argument for onshoring, but it could also be an argument for nearshoring. So another word for make to order is purchase generated manufacturing. It's maybe easier to understand. How do you see this link between the European brands and retailers maybe doing this purchase generated manufacturing close by rather than onshore? I mean, I think the wait times that we're seeing consumers be willing to take these days, it's extending to 6 to 8 weeks. So that does allow for this to be done nearshore rather than onshore. Consumers are increasingly willing to wait. There's a question of how long they're willing to wait. So I do see potential there for nearshoring, not only onshoring, for that reason. Okay, that's clear. I think there's one question coming in from someone who doesn't give his name or her name. In your opinion, at best, when do you think EU market will get back to normal? It's a good question. I mean, I think 2021 is going to be to vary depending upon the vaccine rollout and the reopening. But also, again, you know, first thing, what is normal here? I think the point here of the presentation is that normal is going to be very different post-pandemic. And it's going to be, manufacturers are really going to need to understand that as they adopt to the relationships with their suppliers. In terms of normal from a market standpoint, again, the market in 2024 is going to be smaller than in 2019. We expect to see some recovery, but that's going to vary by market, depending upon how governments react in terms of their stimulus packages and in terms of implementing austerity measures to pay off the debt that they've incurred. So it's hard to give a very clear answer there because it's going to vary by market. And my message really here is that we need to stop thinking about it, about getting back to normal and start thinking about what that new normal is going to look like.
Yeah, and what we heard this morning for some of the countries, the stakeholders themselves, enterprises themselves see at the end of 2021 only a recovery of 80 to 90% of the pre-pandemic levels. No, is this something also you?
Yeah,
see?
I think something along that lines. The specific data points handy at the moment, but that seems to be along the lines, or maybe even more pessimistic than that.
Okay. So last call, last chance for asking some questions. Is there anybody in the chat, Jaina?
Currently, no.
Okay. So, well, thank you very much, Grant. It was full of good information and data. I think I will also hear the presentation again, because I think it would be worthwhile to go through this again, and we'll make this the recording available on our website.
Perfect. Thanks a lot.
Perfect. So